Hey, what's up guys? So BlackRock, literally the world's largest asset manager with over $10 trillion under management, just made some massive moves in crypto that nobody's talking about. And if you miss what I'm about to show you in the next 10 minutes, you might actually kick yourself in 6 months because these 5 cryptos they're accumulating right now could completely change the game. And I'm going to break down exactly what they bought, why they bought it, and what you need to know before you do anything with your own money. So let's get into it. Alright, before we dive into the actual cryptos, I need to give you some context here because this is wild. BlackRock, the same company that manages money for governments, pension funds, and basically every major institution you can think of, has been quietly building their crypto portfolio throughout 2024 and into 2025. Now, when I say quietly, I mean they're not exactly shouting about it on Twitter, but if you look at their SEC filings, their ETF holdings, and their investment vehicles, the pattern is crystal clear. They're not just dipping their toes in the water anymore, they're cannonballing into the deep end, and that should tell you something massive is happening in this space. So the first crypto on this list, and this one's probably not going to surprise you, is Bitcoin. But here's the thing, it's not just that they own Bitcoin, it's how much they're accumulating and the vehicle they're using to do it. BlackRock's iShares Bitcoin Trust, the ETF that launched in January 2024, has absolutely exploded. As of early 2025, this thing is holding over 500,000 Bitcoin, which at current prices is worth somewhere around $20 to $30 billion depending on when you're watching this video. That's insane. Like, to put that in perspective, that's more Bitcoin than some entire countries hold in their reserves. Now, why is BlackRock going so heavy on Bitcoin? Well, it's pretty simple when you break it down. Bitcoin is digital gold, right? It's the store of value play. With inflation still being a concern, even though it's cooled off from the peak, institutions need something that's scarce, that can't be printed into oblivion by central banks, and that has a proven track record. Bitcoin supply is capped at 21 million coins forever. You can't make more, you can't inflate it, and that's exactly what makes it attractive for these massive funds. BlackRock is basically telling their clients, hey, if you want exposure to digital assets, Bitcoin is the safest bet we can offer you right now. And here's something most people don't realize. When BlackRock buys Bitcoin through their ETF, they're not buying it on Coinbase like you and I would. They're doing massive over-the-counter deals, working with custodians like Coinbase Prime, and they're taking that Bitcoin off exchanges permanently. That reduces the available supply, which is basic economics. Less supply plus steady or increasing demand equals higher prices over time. So when you see BlackRock accumulating, that's actually a bullish signal for the entire market. On screen text suggestion, BlackRock's Bitcoin ETF equals 500K plus BTC equals $25 billion plus. Alright, the second crypto they're heavily invested in is Ethereum. Now, Ethereum is different from Bitcoin because it's not just a store of value, it's a platform. Think of Bitcoin as digital gold and Ethereum as digital oil. It's the fuel that powers thousands of decentralized applications, smart contracts, DeFi protocols, NFT marketplaces. All of that stuff runs on Ethereum. BlackRock launched their iShares Ethereum Trust as well, and while it's not as big as the Bitcoin one yet, they're accumulating serious amounts of ETH. Here's why Ethereum makes sense for an institution like BlackRock. First, Ethereum went through something called the merge back in September 2022, where it transitioned from proof of work to proof of stake. What that means in plain English is that Ethereum now uses way less energy, it's more environmentally friendly, and you can actually stake your Ethereum to earn yield, kind of like earning interest on your holdings. For institutions, this is huge because they can hold the asset and generate passive income at the same time. We're talking about staking yields of around 3 to 5% annually, and for a fund managing billions, that adds up fast. Second, Ethereum has become the backbone of what people call Web 3. If you think the internet is going to evolve into something more decentralized, where users own their data and their digital assets, then Ethereum is likely going to be the infrastructure that makes that possible. BlackRock is betting on that future, and honestly, when the world's largest asset manager makes a bet like that, you should probably pay attention. The third crypto on BlackRock's list is going to surprise some people, and it's Solana. Yeah, Solana. Now, I know what you're thinking. Didn't Solana have all those problems with network outages and the whole FTX connection? Yes, it did. But here's the thing about institutional investors. They look past short-term drama and focus on the underlying technology and adoption metrics. And by those measures, Solana is actually crushing it right now in 2025. Solana can process thousands of transactions per second. It has incredibly low fees. We're talking fractions of a penny per transaction, and it's become the go-to blockchain for a lot of consumer-facing crypto applications. Things like mobile payments, gaming, social media on blockchain, a lot of that stuff is being built on Solana because it's just faster and cheaper than Ethereum. BlackRock has been accumulating Solana through various investment vehicles, and while they don't have a spot Solana ETF yet, they've been buying it through their digital asset fund and other private channels. The numbers here are pretty compelling. Solana's network activity has been growing like crazy. Daily active addresses are up, transaction volume is up, and the developer community has come roaring back after the FTX collapse. BlackRock's bet here is that Solana will be the Visa or MasterCard of blockchain, the network that handles everyday transactions for hundreds of millions of people. If that happens, and that's obviously a big if, then Solana could see massive appreciation from current levels. On-screen text suggestion, Solana equals thousands of TPS, fractions of a penny fees. Crypto number 4 is Avalanche, and this one flies under the radar for a lot of retail investors, but institutions absolutely love it. Avalanche is another Layer 1 blockchain, meaning it's a competitor to Ethereum and Solana, but it has some unique features that make it attractive. The biggest one is something called subnets, which basically allows you to create custom blockchains that run on top of the Avalanche network. This is perfect for enterprises and financial institutions who want blockchain technology but need their own private, permissioned version. BlackRock has been particularly interested in Avalanche for tokenization projects. What's tokenization? It's taking real-world assets like stocks, bonds, real estate, commodities, and representing them as tokens on a blockchain. This makes them easier to trade, more liquid, and accessible to a global audience 24/7. BlackRock has even done pilot programs using Avalanche to tokenize money market funds, which is a huge deal because it shows they're not just speculating on crypto, they're actually using the technology for real financial products. The Avalanche team has also been super focused on compliance and working with regulators, which is exactly what institutional investors want to see. They don't want to touch something that might get them in trouble with the SEC or other regulatory bodies. Avalanche has positioned itself as the blockchain for traditional finance to move on-chain, and BlackRock's involvement is proof that this strategy is working. And finally, the fifth crypto that BlackRock has been accumulating is Chainlink. Now, Chainlink is a little different from the others because it's not a Layer 1 blockchain. Instead, it's what's called an oracle network. In simple terms, Chainlink connects blockchains to real-world data. Like, if you have a smart contract that needs to know the current price of gold, or the weather in a specific city, or the outcome of a sports game, Chainlink is what provides that data in a secure and decentralized way. Why does BlackRock care about this? Because if you're going to tokenize trillions of dollars worth of traditional assets and move them onto blockchains, you need reliable data feeds. You need to know what those assets are worth in real time, and you need to trust that the data hasn't been manipulated. Chainlink has become the industry standard for this, and they're integrated with pretty much every major blockchain and DeFi protocol out there. BlackRock has been quietly accumulating Chainlink tokens, and they've also partnered with Chainlink on several projects related to their tokenization initiatives. In fact, BlackRock has publicly stated that Chainlink's proof of reserve system is something they're using to bring transparency to tokenized assets. This is massive because it shows that Chainlink isn't just some speculative crypto token, it's actual infrastructure that major financial institutions are relying on. On-screen text suggestion, Chainlink equals the data bridge between blockchain and real world. So now let's talk about what this all means for you. Should you just go out and buy all 5 of these cryptos because BlackRock is buying them? Well, not so fast. Here's the thing about institutional investing versus retail investing. BlackRock has billions of dollars. They can afford to hold these assets for years. They're not worried about short-term volatility, and they have teams of analysts and risk managers making sure they're not putting all their eggs in one basket. You and I, we're in a different position. But there are some key lessons we can take from BlackRock's strategy. First, they're clearly betting on crypto as an asset class for the long term. This isn't a trade for them, it's a strategic allocation. If you're going to invest in crypto, you should probably think about it the same way. Not trying to time the market, not trying to get rich overnight, but building a position over time that you're comfortable holding through the ups and downs. Second, look at the types of crypto they're choosing. They're not buying dog coins or meme tokens. They're buying established projects with real technology, real use cases, and real adoption. Bitcoin as digital gold, Ethereum as the smart contract platform, Solana as the high-speed transaction network, Avalanche as the enterprise blockchain, and Chainlink as the data infrastructure. These are fundamentals-based investments, not hype-based. Third, diversification matters. Notice BlackRock isn't putting everything into just Bitcoin. They're spreading across different types of crypto assets that serve different purposes. If one underperforms, the others might pick up the slack. That's portfolio construction 101, and it applies just as much to crypto as it does to stocks and bonds. Now, here's what I would suggest if you're interested in this space. First, do your own research. I'm going to drop some links in the description to resources where you can learn more about each of these projects. Read the white papers, understand the technology, follow the development updates. Second, if you're going to invest, start small. Don't bet your life savings on crypto just because BlackRock is buying it. Maybe start with 1 to 5% of your portfolio and see how you feel about the volatility. Third, think about your time horizon. If you need this money in the next year or two, crypto might not be the right place for it. But if you're thinking 5, 10, 15 years out, and you believe that blockchain technology is going to transform finance, then having some exposure might make sense. And fourth, security is crucial. If you're buying crypto, learn how to properly secure it. Use hardware wallets for large amounts, enable two-factor authentication on your exchange accounts, and never share your private keys with anyone. On-screen text suggestion, start small, 1 to 5% of portfolio, long-term horizon. Let me also talk about the risks here because it's not all sunshine and rainbows. Crypto is still extremely volatile. We've seen Bitcoin go from 60,000 down to 15,000 and back up again multiple times. Can you handle seeing your investment drop 30, 40, 50%? Because that can and has happened in this market. Regulatory risk is also huge. Governments around the world are still figuring out how to regulate crypto, and new laws could significantly impact these assets. The SEC in the US has been going after various crypto projects, and while Bitcoin and Ethereum seem relatively safe, some of the others could face challenges. There's also technology risk. These are complex systems, and bugs, hacks, or fundamental flaws could cause problems. We've seen major hacks in the past where millions or even billions of dollars were stolen. And finally, there's the risk that the thesis is just wrong. Maybe blockchain technology doesn't become as transformational as people think. Maybe better solutions emerge. You have to be comfortable with these risks if you're going to invest. But here's the flip side. If you had listened when institutions first started getting into Bitcoin back in 2020 and 2021, when companies like MicroStrategy and Tesla were buying, you would have done pretty well despite the volatility. If you had recognized that Ethereum was more than just another cryptocurrency when institutional interest started picking up after the merge, you would have positioned yourself well. The point is, institutional money is usually smart money, not always, but usually. They have resources and information that retail investors don't, and when they start moving into a space in a big way, it's worth paying attention. On-screen text suggestion, institutional money equals often early to major trends. So here's my take after looking at all this data and all these moves by BlackRock. Crypto is transitioning from a speculative fringe asset class into a legitimate part of the financial system. It's not going to happen overnight, and there will be plenty of bumps along the way, but the direction is pretty clear. When the world's largest asset manager is not just dabbling but going all in with billions of dollars, that tells you something fundamental has shifted. The question is, are you going to be positioned for that shift, or are you going to sit on the sidelines and watch? Now, if you found this video helpful and you want to go deeper into crypto investing, I've actually created a complete guide that walks you through exactly how to research crypto projects, how to build a diversified crypto portfolio, how to secure your assets, and how to avoid the common mistakes that blow up most beginners. I'll put a link to that in the description below. It's not some generic course, it's the exact process I use to evaluate crypto investments, and it includes spreadsheets, checklists, and everything you need to make informed decisions. I've also got a free resource for you. I created a simple one-page crypto portfolio tracker template that you can download right now. It helps you keep track of your holdings, your cost basis, your gains and losses, and it even has a section for notes on why you bought each asset so you can stay disciplined during volatile times. That link is also in the description, completely free. Just download it and start using it. And look, if you're still watching this video right now, you're obviously serious about improving your financial situation and understanding these new opportunities. So do me a favor, hit that subscribe button and tap the bell icon because I put out videos like this every single week breaking down complex financial topics in a way that actually makes sense. We talk about investing, personal finance, wealth building, all the stuff that they should teach in school but don't. I read every single comment, so drop your thoughts below. Are you bullish on crypto? Which of these 5 would you invest in? Let me know. And if you know someone who's been asking about crypto or who's interested in what institutional investors are doing, share this video with them. It genuinely helps the channel grow and helps me reach more people who want to improve their financial lives. Last thing, if you enjoyed this video, give it a thumbs up. It tells YouTube to show this content to more people, and it helps me know what kind of content you want to see more of. Alright, so just to wrap this all up, BlackRock is accumulating Bitcoin, Ethereum, Solana, Avalanche, and Chainlink in a major way throughout 2025. These aren't random picks, they're strategic bets on different aspects of the blockchain ecosystem. Bitcoin for store of value, Ethereum for smart contracts and DeFi, Solana for high-speed consumer applications, Avalanche for enterprise and tokenization, and Chainlink for data infrastructure. Each serves a unique purpose, and together they represent a diversified approach to the crypto market. The lesson here isn't necessarily to copy BlackRock trade for trade, but to understand the thesis behind their moves and apply that thinking to your own situation. Institutions don't chase hype, they look for fundamental value and long-term trends. If you approach crypto with that same mindset, do your homework, invest amounts you can afford to hold through volatility, and think in years not weeks, you'll be way ahead of 90% of people in this space. Thanks so much for watching. I'll see you in the next video, and remember, keep learning, keep building wealth, and I'll catch you soon. I am not a SEBI-registered advisor. All content is for educational purposes only. Past performance is not indicative of future results. Do your own research before investing.